According to data from HMRC, there are 4,850 ISA millionaires. And have you ever wondered how the 0.02% of people invest their money and what you can learn from them? Well, that's exactly the question we're going to answer in this video. What are the top 6 investing tips that you can get from ISA millionaires? Luckily for us mere mortals, ISA providers do surveys like this one from Hargreaves Lansdown every single year. So that means we'll be looking at what the evidence says from people who have actually done it. Not opinions, not what you might read in investing books or see online, but how they have actually done it. And I can't lie, some of these really surprised me. We're going to start with a big one right off the bat that I must say I really didn't expect. Conventional wisdom that you see online and absolutely all over the place is to buy low-cost, globally diversified index funds, invest consistently over a long enough time period. How many times have you seen that, right? I mean, God, it's even what I do. And I'm not saying that for most people this isn't a perfectly fine investing strategy, but what we're going to find is that almost every piece of advice in that sentence doesn't stack up to the data that we're going to look at. So if that's not the investing strategy of ISA millionaires, what do? Well, this quote from AJ Bell's ISA millionaires report for this year found that, quote, "Today, AJ Bell's ISA millionaires have shown a preference for investing in individual shares rather than funds, with 75% of their portfolio sitting in stocks." I mean, this one surprised me. I cannot even lie about it. But I think it's also worth mentioning that AJ Bell also think they have the answer, saying, quote, "Those with larger amounts in their ISA may be better placed to take the higher risks associated with investing in individual equities and have a big enough pool of assets to diversify appropriately." So that's our first lesson from ISA millionaires straight away, that they allocate much more of their money to individual stocks over funds. But as we'll come on to later, that's only really half of the story. But the most important takeaway from these 0.02%ers is that they are investing. These are not cash ISA people. These are people who are actively managing their funds and who are actively investing. Stick to quality stocks. So if they've got 75% of their capital sitting in individual stocks rather than funds, then what stocks are they buying? And this next piece also really surprised me. AJ Bell writes, quote, "Big blue chip names like Shell, Lloyds and GSK are the most popular stocks with AJ Bell customers who are ISA millionaires. US listed tech giants including Nvidia, Microsoft and Apple also feature in portfolios, but have far more large cap dividend paying stocks from UK markets than overseas listed stocks which pay little or no income to shareholders." I'm learning so much already and I really feel like I need to reassess my life and investing strategies, but never mind. But this focus on dividends is a very sensible one for our absolute ISA specimens. Think about it. Dividends are great. They don't use any of your annual £20,000 ISA allowance, meaning you can add tax-free cash to invest in your ISA anyway. There are also plenty of options to set this up automatically with reduced commission and to automatically reinvest dividends. So whilst having stocks that will appreciate in value is obviously a very nice thing to have, especially when you look at how FANG or other big tech stocks have performed over the last 2 to 3 decades, but to still include just reliable dividend-paying stocks is another solid option, and the truth is, doing both is best. So that's lesson number 2. Don't forget about dividends. Chasing that Nvidia or Spotify's up 150% of the year is great, but you know what else is great? Dividends. But as we'll discuss next, people who invest in individual stocks are definitely taking on more risk, but these ISA millionaires understand risk. Take a look at this here from Interactive Investor. These ISA overlords also hold very small amounts of cash, typically holding 5% of cash compared to the average ISA investor who will typically hold 8% or more. So why is this? Well, typical investing strategies go something like this. The higher the risk, the higher return. The individual stocks will be more volatile from day to day when compared to bonds or even an index fund, but they also have the potential for higher returns. The millionaires clearly understand this, that in order to build a meaningful portfolio, they have to accept some degree of higher risk, something that they seem only too happy to do. And there's more evidence of this, including this piece from a report published by Hargreaves Lansdown. Over a period of 5 years or more, investments usually give you a higher rate of return compared to cash savings. In fact, there's over 100 years of data showing that for 91% of 10-year periods, investment in shares have done better than holding cash. This is something our ISA millionaires totally get. But these top-tier ISA investors also understand 2 things. That being invested into equities, especially individual stocks, carries risk, and they want to balance out that risk with things like bonds. And the second thing really is international diversification. These people don't just have their assets invested in a single country. We've already discussed that when we look at the top investments, we see a mix of high dividend UK stocks in some more traditional areas like oil and gas, for example, but also high growth tech stocks for the capital appreciation, which will typically be US based. We also see that they might not hold cash at the same rate as a regular ISA account holder, and they also tend to hold bonds. This can be a less risky place to park your money, but in the risk-return trade-off world that we're working in, that will mean that you get a lower rate of return compared to individual stocks. Heavy out of the gates. Take a look at this quote here. ISA millionaires are early birds, investing 40% of their ISA allowances in April 2023 alone, giving their money as much time as possible to generate returns. So this means that they are using nearly half of their ISA allowance in the same month that the allowance resets at the start of each tax year in April. And this is something that we have also discussed before on the channel, because most people do what's called cost averaging. They set a budget for themselves every month and they invest that amount every single month, usually to coincide with when they get paid. Again, another perfectly sensible investing strategy. And the truth is, this suits most people because they can set aside that money every single month and include it in their budget. But we like evidence on this channel, and we should point out this important study from Vanguard, which found, quote, a historical comparison of cost averaging and lump sum methods across regions shows that lump sum has outperformed on average, suggesting you're usually better off investing immediately instead of holding back a portion of your potential investment. As the figure shows, lump sum investing is a better option than cost averaging, outperforming 68% of the time. So what does this mean? Well, ISA millionaires understand that front-loading their contributions at the start of the new tax year gives their investments more time in the market to work, and this is empirically proven to boost their returns. Now, clearly people who have 40% of their £20,000 annual allowance to invest every year are few and far between, but it does at least illustrate another difference when compared to other UK investors. And I think critically, they also understand that by putting their money into the market for as much of the year as possible, they're giving their money the longest time period to be able to go to work for them to generate returns, or as it turns out, to earn dividends. But what this also means is another really important point which we shouldn't skip over, which is why ISA millionaires are investors, not traders. Take a look at this quote here that I hope will dispel some myths. Male millionaires trade more often, logging 26.6 trades a year compared to 14 for women. So I really want to use this to dispel a bad conclusion that plenty of people might draw, that these people who have 75% of their assets in individual stocks and they front load their cash because they're trading regularly to maximize returns. And I think it's safe to say that this quote proves that actually that isn't the case. If anything, this quote proves that these people are not day trading. They're not buying and selling within days hoping to make a quick, high-risk return. These are, for the most part, people who are investing consistently, but also picking high-value companies and holding onto those stocks for longer periods of time. With trading frequency like this, we're talking about a trade every 2 to 4 weeks, not multiple trades in a single day. Not some of these imbeciles that you'll see promoting day trading on Instagram or on YouTube. So remember what I said at the start of the video, that these ISA millionaires are often holding 75% in stocks instead of funds? The data that we've just looked at really should back that up. These are not day traders. They find stocks they like and then they hold on to them for a longer period of time. And I think this leads to maybe the most important part, which is patience. We should also acknowledge a very empirically and mathematically important aspect of this, which is that most of these ISA millionaires are old. In this instance, being old has benefits. And the biggest benefit is that it's given them a long runway, allowing compound interest to build over time and boost their ISA balances. Mediocre returns will beat stellar returns over a long enough time period every single time. And the proof here is that, and this varies from one ISA provider to another, but the average age of an ISA millionaire for Interactive Investor is 70. An ISA millionaire on average for Hargreaves Lansdown is 75, and for AJ Bell is 72. So what does this really tell us? Well, ultimately that these people have been a firm beneficiary of compound interest, that in all probability they've been at this for a long time, and that this long time horizon has really allowed them to capitalize on their gains. This is also something that we've discussed in this video just here, and there's no getting away from it. That's the cold hard truth for so much of this. For all the technical stuff that you can get right about managing risk, asset allocation, international versus domestic investments, stocks and bonds, there are two things that you'll also really need: time and patience. And to back this up, here's an excerpt from a Hargreaves Lansdown report where they actually interviewed ISA millionaires and asked them for their specific investing advice. Here are the 3 people that they profiled for this particular question, and when it comes to investing mottos, they all said pretty much the same thing. Be calm and invest for the long term. Try not to chase the story. Investing is for the long term. But having said that, AJ Bell also confirms this. Indeed, the youngest ISA millionaire with AJ Bell is just 36 years old, which should give encouragement to anyone squirreling away as much as they can into their ISA to achieve a 7-digit figure one day. So what have we learnt about our ISA heroes? That they started investing early, that they are generally kind of old and so have the benefit of time and compound interest for their stocks to grow, that they like high dividend stocks, not just high growth stocks, that they understand risk, and maybe the most important thing of all is that they are actually investing. They're not putting it under their mattress, they're not having it sit in a current account, they are going out and getting their money to work for them. This seems like an excellent segue if you really want to learn more and take your understanding to the next level. We have this video just here which covers the best ISA providers, and a video just here which covers the 14 investing mistakes that you have to avoid when it comes to your ISA. Thanks very much for watching. If you've liked this video, please like and subscribe. It doesn't cost you a penny, and if you think I'm talking nonsense, you can always unsubscribe later. Thanks very much for watching.